Every 4 years, Bitcoin does something no other asset on Earth can do. It literally cuts its new supply in half. And every single cycle, people say the exact same thing. The halving happened. Bitcoin is about to explode. But here's the truth. Nobody wants to hear most investors completely misunderstand what the halving actually means.
Come on, go up!
Because the halving is not a magic button that instantly sends Bitcoin to the moon. And misunderstanding this has caused countless investors to buy too late, panic too early, and miss the biggest moves entirely. By the end of this video, you'll understand what the Bitcoin halving actually does, why the timing always confuses investors, and why smart money treats it very differently than retail does. Let's get into it. Here's the narrative everyone hears. Bitcoin's supply gets cut in half. Therefore, price immediately goes up. Simple. But markets are never that simple. If it were that easy, everyone would buy the day before the halving and become rich overnight.
Need to buy more before it is too late.
The reality? Bitcoin often spends months doing almost nothing after a halving. After the 2020 halving, Bitcoin moved sideways for months before eventually exploding higher. The market needs time to absorb the reduced supply. And that's the first big misunderstanding. The halving changes the long-term supply dynamics. It does not guarantee an immediate price pump. Let's simplify it. When Bitcoin launched in 2009, miners received 50 Bitcoin every block. Then that became 25. Then 12.5. Then 6.25. And now, just 3.125 Bitcoin. Every 4 years, new Bitcoin entering the market gets cut by 50%. This means fewer coins are available for sale every single day. And that's important because demand doesn't need to explode overnight. It simply needs to stay the same or slowly increase. Less supply plus growing demand eventually creates pressure on price. Think about real estate. If fewer houses were built every year while more people wanted homes, prices would naturally rise over time. Bitcoin works similarly. The halving slowly increases scarcity. And scarcity is Bitcoin's entire value proposition. Here's what most influencers skip. The halving is actually painful for miners. Imagine your salary getting cut in half overnight while your expenses stay exactly the same. That's what happens to Bitcoin miners. Less efficient miners suddenly become unprofitable. Some are forced to sell Bitcoin reserves. Some shut down entirely. And this can actually create short-term selling pressure, which is why Bitcoin doesn't always go vertical immediately after the halving. The mining industry needs time to adjust, and only after that adjustment does the reduced supply begin having a larger effect. Previous halvings happened in a completely different environment. This time, something new exists. Spot Bitcoin ETFs. Institutional demand. Public companies buying Bitcoin. Governments discussing strategic reserves. For the first time in Bitcoin history, massive pools of capital are competing for an asset whose supply is becoming increasingly limited. And remember, nearly 94% of all Bitcoin that will ever exist has already been mined. There are only a few million coins left to enter circulation over the next century. That's why many long-term investors believe the halving matters more than ever. Not because price has to explode tomorrow, but because Bitcoin's scarcity keeps increasing while demand keeps expanding. Smart money doesn't buy Bitcoin 1 week before the halving expecting instant riches. And they don't panic if nothing happens immediately afterward. They understand that the halving is a multi-year event. They use bear markets to accumulate. They focus on long-term supply trends. And then they do something incredibly difficult. They sit. They wait. Because the biggest returns in Bitcoin history didn't come from perfectly timing every move. They came from understanding the thesis early and having the patience to let it play out. The Bitcoin halving is real. The supply shock is real. But the idea that it instantly sends Bitcoin higher every single time? That's an oversimplification. The halving isn't a short-term trading signal. It's a long-term reminder that Bitcoin becomes scarcer every 4 years. And in markets, scarcity has always mattered. If this changed how you think about Bitcoin halvings, hit that like button and subscribe. And let me know in the comments. Do you think this cycle will be different because of ETFs and institutions, or will history repeat itself once again? I read every single comment. See you in the next one.